The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. On this Friday, the 21st of November, we're looking at the Dow up. Let's see, this is the E-mini. So the E-mini has made a little double top. Let me show you in the 10-minute chart. It's actually like a triple top. And until, if it can break in the next, I would say it needs to do it in the next 30, before the 10-20 time frame. If it can push into the 65.98, 66.02 area, the target would be 66.13, which is the 200-period exponential moving average in the 10-minute chart. It better hold 65.60, otherwise that's a real problem. I'll talk about everything as we go along. Let's just run this quickly because there's a lot to discuss. Whoops, wrong chart. ESD 25. Let's go back there. Okay, that's back. Now we can go to the Dow. So, I'll start off with this. I'd mentioned yesterday that we should be making an internal low and there could be a residual low. But the fact that we reversed so sharply to come down 1,000 points from the high of yesterday, over 1,000 points, 1,100 actually, said that maybe this will be, I'm not guessing right now, I'm just putting it in. In fact, I'm going to put it in gray just to say that I need to put it there as a potential, because we don't know whether there's going to be a V-shaped turnaround. Look, on the 7th of April, there was at 36,600, there was a huge V-shaped turnaround. Then it did, it turned down, but held very well, and then started a big rally. So usually you get an internal low and then very quickly you get a residual low. We've done that many times. Does this change? I don't know. All I can say is that the negativity that I don't want to go through everything. I don't want to litigate this Dow chart. It's called the Chapman Wave Dark News Cloud Cover using the Dow Daily chart. And also I use internal high and residual high and internal low and residual low. Think of that as earthquake and aftershock. Earthquake at the internal high of 48,040, pulls back and then goes to the high that was made on the 12th or 13th of November at 48, right there at 48,431. And that's the residual high. And now we're going to be waiting for an internal low, and then we can start deciding what to do. All right, that's done with this particular chart. Let's go to the next thing, which will be it went to the VIX index. Let me just do that. So I drew this in. I was asked the other day, where do I think that some kind of at least a decent low in the Dow would be made? Well, I'm looking at the VIX index, which really has the New York Stock Exchange options as it's the criteria that it uses to be able to for the data that it uses. Doesn't matter. I had said 28.99 was the regulation. You remember that sudden the whole thing about regulation and the yields, etc. On the 17th of October, 28.99, whoosh, we come all the way down to, I didn't even type it in, all the way down to 15.62 on the 27th of October. 15.62 on 10/27/25. Kicks us off to a really big rally in the VIX index. And what does it do? It goes on the, right here, 2 days ago, that was the 20th, it goes to 28.27. But I had been asked about a week ago, either this Monday or the last week, where I thought that this would go if I did a measured move from the left side to the right. Well, that says if I use the high of that 22.72 of the 7th of, this is a daily chart, 7th of November, just a measured move with a Chapman wave in dashed green inside wedge target resistance line, I would say around about the 28th of November, we should be testing 28.99 and maybe going higher. Well, yesterday we went to 28.27. How the volatility index holds today will decide for me whether or not this flat stochastic at 82% is telling us that fund managers are buying insurance. Treat this also as insurance, besides the fact that the UVXY is probably the trading vehicle. UVXY, I was asked about it yesterday. I said I would just keep holding it, even though it could be pulling back a little bit. And here it is up. No, now it's down 16 cents. It was up. It's at 65.36. Yesterday went to, I don't usually do that. I always do the Chapman wave notation, but I don't necessarily treat it as the gospel. So when you look at this low right here, back in the beginning of October, you can go peak A. I do it. I always do it, even if it's the weather report. I do a Chapman wave. A lot of people do it. They tell me, I can't really look at anything without counting the waves. So we go to a peak E right there. This is the UVXY that was on the 17th of October at 70.60, come plummeting down to a new low. The new low is 48.25 on the 27th of October. And what do? We go peak A, put an up arrow in, put a down arrow there. Remember, I don't necessarily use this because it's an emotional thing, but I can't help notating it. And it does help. A, B, C, and we got to a D. So far, it's a leg D. It'll be a peak D if we don't make a new high today in the UVXY. And something's telling me that this is not done. The fact that, okay, so now I'm moving right on. The fact that NVIDIA, which was already coming down, has gone from 212.19 on the 29th of October to where we are right now at 177. And it's one of the leaders in the semiconductor area. And we've got a peak D in the weekly chart, peak F in the daily, peak D in the weekly chart. I have to consider that it can't be a 1 day or 2 day pullback that we saw at around number 96 high yesterday, intraday high, after a fractional 95.90 or something open. It goes to 96, and then that's it. And it comes all the way. Where is it right now? 177. 177. Why did I put 96? I meant 196. Was he saying, what is this? 96. So it was 196 round number high yesterday, and then it comes tumbling down. So what I'm looking at here is it's a little more complex because the 9-period moving average in the weekly chart is still very positive. So I'm not saying that's the end of the world for NVIDIA. I am saying it is going to be under pressure, and I suspect that pressure, look, this is almost like a Chapman wave, inverted Chapman wave Roman candle, but the day's barely begun. We're not even an hour into the first for today's trading. So I don't want to say that just yet, but we're breaking key support right here. So this is going to be a very important moment to monitor. That's in the semiconductor area, semiconductors. Now, I had wanted to short semis ages ago via the SOXS, but that 3 times short is so volatile that even if you were correct, you probably would have been stopped out if you put it in some kind of a stop, because you really have to have stops in place when you, especially 3 times short or long. All right, so what we're looking at here is extreme volatility. But as we go into the break, this is really what I wanted to show you. The weekly chart, there's no way on earth that we're going to 48,432 in the Dow today. This is going to be a peak D for the first time in quite a while in the weekly chart. I respect that. I'll be back. Dow's up 187. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks. So let me just do a couple of things here. So I was talking about the weekly chart, but that 9 is still way over the 14. So this is just, we haven't even got a sell signal yet in the weekly chart. We certainly have a sell mode in the daily. The Dow's up 180, but that's not. So we actually finally got a short right at the top, almost at the top yesterday of that big spike of the Dow. Gosh, it just took so many times to try. But we'll see what happens. You know, I just haven't added to it or anything like that. I'm just watching it closely. My target would be for the Dow to test 45,452 sometime by the 26th to 28th of November. We'll say it could do it sooner, but I'm just saying that's this measured move to the left side. Most importantly, what I wanted to show you is this, within the context of different sectors. Look, here's the XLF. I got questions, and I'll get to them in a moment. At the 200-period moving average, this is the S&P Select Financial Spider Fund, a really important ingredient to my whole market analysis. It has gone to a sell signal in the weekly chart, and if it closes anywhere here at 51.30 or anywhere under 51.50, I would say, I have to consider that that's a dreaded H pattern which has gone to a sell mode. I am unhappy about that. It's disappointing to see, but I have to respect it. And then I have to go to this chart right here. Remember, we've spoken about this many, many times. This is the correlation. Yes, did I just do something dumb? Yep. So there's SPY. So let me just do this. Does that mean I'm going to have to change everything? All right, just give me a second. It's coming up. How did that happen? SPY, SPY. I hope that's going to be good. There we go. Yes. Oh, no. Oh, goodness gracious. SPY 500 blue. I don't know what I'm doing here. So let's just do this again. So the blue is the SPY. Now, this should have been, let me just tap on it and go format SPY. and just put it into XLF. No, that is the SPY. Okay, I have to reverse both of them, I think. Man, I don't know why I do that or how it happens. So that becomes XLF, and this becomes, no. Good grief. Oh, man. Why is it only to 2021? All right, I don't want to waste time. I'm going to try to finish this up. ESZ. So that's XLF. And let's go to this. It is blue. Let me just check scaling style. Pink. Okay, got it. So then I can put in settings, XLF. Oh, let's hope that this works. I've got it all upside down, but let's just see if that's going to work. Here we go. There we go. Okay, got it. So the XLF is pink. There's a monthly chart. The SPY is in blue. And let me just click on the SPY. There you are. You can see it much better now. Okay, good. That's what I was missing yesterday when I did it. So look, they coincided at the top right there. This is September. They went, both of them made highs. October, they didn't make new highs. And now in December, making lower highs and lower lows. But look at the coincidence of all the bottoms and the tops. It's just remarkable. Look at that. 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 So I'm just going to suggest to you that I'm watching the S&P XLF pink monthly chart, financials, together with the SPY monthly chart, the SPY ETF fund, and I'm watching them together because the deeper they pull back, the greater the chances are that I've got to respect it as a kind of a market monitor. So far, they're pulling back in unison, but I just have to consider that it is part of this consolidation that started. Let me go to the weekly charts. Here we go. The weekly charts made a high right there. That was, I should have typed it in, 54.50, 54. Oh, I remember, 2-bar weekly, 2-bar Chapman wave reversal. 19th of September goes to 54.50, 54.50. 19th of September, 9/19. Ho, ho, ho. Look at this. And the S&P made its high. Type it there. SPY. There we go. SPY made its high on the I knew I had to check that out. So that was in October the 31st. So at 688.70. Oh, this is very interesting. Doesn't often miss 688.70. Doesn't miss by a month. Now, why was that chart not accurate? Let me just go back for 1 second. I just want to see, because if it misses by a month and it anticipates, they're both the same. I didn't finish that. Okay, there it is. Okay. I needed to look at this closely. I usually do it over the weekend, but this one still doesn't work that way. Look, here's the monthly chart. I can't mess around with this. I'm just saying that if the financials came down earlier than the S&P, I have to respect that as saying, oops, weakness there has to do with rates and all sorts of things like that. All right, let's get back for a moment. This is Tiger Technicians Hour, Friday edition, where we do Chapman wave notation in greater detail. I'm anticipating that there's going to be a rally attempt, that there's a chance that yesterday's low, if it doesn't get taken out, now that becomes the internal low, because we had, I thought, well, it might have been the internal low yesterday. We took it out. So I'm watching this closely, and that says there could be a bounce, and there's some kind of retest on bad news going into maybe the long weekend. Maybe it's Friday, maybe it's Monday, or Friday when we're half closed. I don't know. We'll see what happens, but I'm watching this closely. I don't know if Friday we're half closed. We'll see. So this is a nice rally because it's trying to get, as I said, I'll repeat it again. If we can get above 66.03, then 66.13 would be the 200-period exponential moving average in the 10-minute chart. We'll see what happens there. So now let's get back to our story. I want to go back to questions that I had. No, I didn't finish everything. TLT. The TLT, this is the Treasury bond fund, trading up 27 cents, trying to form a little base on the 200-period moving average of 89. So you go to TBT, which is the exact mirror image, and there it is, peak D, peak E. It went to an E, and now it's pulling back. Now, maybe that's a good sign. Maybe yields. Well, we'll see what happens because the Fed is all over the place. They have yeses and they have nos about rates, whatever. Okay, so I'm going to watch this because this says yields are just trying to turn down right now. They bounced off from 31.69. They bounced off the 32 level in the 200-period moving average, and the 9-period moving average is still very weak. The MACD is weak in the weekly chart, so that is yields themselves. All right. With that said, I want to go through a bunch of things. Should I do it now? Oh, it's got a break coming up. Let me just do my first question here. Microsoft, MSFT, down 4.50 at 473.93, under the 200-period moving average. This is acting very poorly. We are still long, but just watching it. We're not doing anything. We're long just a little bit. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So just let me do this. So Microsoft is trading at 478.92. It's acting very poorly. It's under the 200-period moving average. If there's any bounce, the 480 area should kind of... it'll be a magnet. It should try to tag it. Even if it goes up, I think it'll come back to the 480 level. The visuals say that this little doji candle right here, right there, would be 462 to 455. That would be my 462 would be the next very important support level. If it takes that out, we're looking at the 450s. But then that, we'll see whether that's it. But that's kind of what I'm looking at for Microsoft. But what's interesting, I'm just looking at this now. You've got, I've liked this for a long time, Triple M. Is up today, up 2.22. Look, it's held extremely well under all these multinational abrasives, adhesives, electrical components. I think something to do. Well, they have the healthcare stock. We don't have it anymore. Solventum, SOLV. Look at that big move. Should have had it. We had it, gave it up, and all of a sudden it's 82. Getting back to the 85.92. This is the healthcare. Look at this. I've been talking about this all the time. What is good? Johnson & Johnson. Again, moving up. Up 234 at 205. We've got in the Dow itself, what did I just see? Moving up. SHW, Sherwin-Williams. Gosh, Sherwin-Williams is up 10. Not a great looking chart, but it is up 10. So Home Depot must be up. Home Depot is down. No, it's up 9. Oh, but look at that horrible chart. Yeah, so this is what I'm saying. A lot's going on. There's a lot of damage done. There's been a rotational correction, and now we're getting the former big winners are starting to take it on the chin. Look at this. We're actually now symbolic. We're out of everything that we've had. We've had fantastic profits in this particular position. It read an 84 round number high. We were in at 48, took profits along the way, just kept a little bit, and now that is out for a gain from our 48 level. We got out at 50 for the very last little bit. Yeah, that's a big turnaround. This is Symbiotic Inc., end-to-end AI, robotic warehouse automation systems. Question came in about SMR. SMR. Why am I thinking SMR is... New Scale Power Core. I looked at this a long time ago. I've completely forgotten about it. Peak A, B, C, D, E, F in the monthly chart. Peak, the latest is in the weekly chart. I have to go here. So this is peak A, B, C, D, and then spikes to almost like a rogue. Oh, this is like a rogue wave. Spike to the upside to the 57.42 level the week of the 17th of October comes. Where is it right now? Look, the 200-period moving average before was an incredible magnet. I'm watching this closely because if 17.59 where it is right now and the 200-period moving average is 17.70, if this closes under it, I'm going to have to say to you, I don't know what kind of power it does, new scale power, but this is not good at all. What it says, if it does turn around, the pink 9-period moving average at 22.53 and the 14-period above it is at 25.40. The MACD histogram is still very weak. Stochastic's flat at 2%. You remember what I say when I'm looking at a stock or a position and it's trading at 98%? I say that's the best thing you could ever have. You have to expect that at some point it's going to go from 98 probably down to 30 or something. But in the meantime, that's fantastic. This is the exact opposite. What's the opposite word of fantastic? Unfantastic. This is just unfantastic. Down at 2% in the stochastic and flat. I'm sorry, this doesn't look like If this takes out, look at the low, the double bottom low at 11.08 and 11.58, the week of the 4th of April and the week of 11th of April. If this little doji candle low of 15.64 is taken out in the next week or two, you've got to anticipate that it has to very quickly revert to an up mode, take out yesterday's high, and yesterday's high was 22.69. It has to do that. By Tuesday, it has to be at least to the upper part of this ugly candle. Otherwise, it's not looking very good at all. So SMR, if you're short, fantastic. What I would say, if you're short, you could even take a tiny little bit off here and just use a trading stop. That's the best thing to do there. Next question came in. Okla. Yeah, Okla. Oh, man, these got hit, huh? OKLO. Okla is trading. This is, Okla is the clean energy, also a nuclear startup. Made a peak C in the monthly chart, huge turn down. Peak D, remember in the Chapman Wave methodology? I just need to do this because it's Technical Friday and we always have new people. Where is that? Show you what I'm always looking at. So in the Chapman Wave methodology, we're always trying to anticipate a low, and if the low gets upgraded from a buy signal to a buy mode, you expect at least a peak D. Peak A is the first, 1 penny above that goes to peak B. They're called the floating letter until it makes a peak, pulls back, 1 penny above B starts C. But if it's upgraded from a buy signal to a buy mode, you expect at least a peak D. And then you have to reassess. It could continue an instant restart. It could pull back sharply. It could continue to E, F, and G. There's never an H. D is where we are. And look at this D pullback. Peak D at 197. Big D at 100, and it's just a little dark. I can't see it. And I don't know why it's still messing around here. Are you messing with me? 193.84 the week of the 17th of October. Here we are at 79. And right on the 200-period moving average, same thing. You're absolutely correct. Yes. 79.16 is the 200-period moving average support. And you're looking at a big red candle down 873 today at 79.37. If it zips right through that, it could come back, but that 79 is going to be a big magnet line up and down. So watch it closely. Next question came in. If I can move that away. Oh, there's a question I didn't even see. Oh, could I post SoFi? Yeah, remember, so for subscribers, so you can become a subscriber and you will get, for instance, today, I'm hoping I can do it today. Otherwise, I'll do it first thing in the morning. Usually it's Friday afternoon. I do an hour and a half video for my subscribers. It's overview. It goes through techniques that we're looking at, what we want to, things we are looking at to do. And I have a list of stocks that we are looking to buy on the next major low that we can make. If we're able to recognize it, it's going to be a big deal. But in the meantime, and so you can become a subscriber and you'll be able to get that. So far, they've only been for subscribers. I've not done a webinar in a little while, but I've been asked if I would do it. I'll have to think about it. It's a difficult time now, of course, with Thanksgiving coming up. Well, a lovely time, but a difficult time for a webinar. But maybe in December. I'll be back in a moment. Dow is up 150. S&P is now down 8.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we were asked about SoFi Technologies, online banking, financial solutions, student loans, etc. So monthly chart leg D. It went in my left side, right side price time match. It went from the high that was made around about July or so of 2023 as a midpoint from the February 2021 28.26 high to the December 2022 4.24 low. I used that peak B as a left side right side price time match, and it got to the 28.26 level three months early. And now it's gone even higher, and it's screamed up to 30. What did I say was the high was? Let me just check this out here. So the technicals of the monthly chart are still very strong. The weekly chart at that high that was made, I better type it in because I'm going to forget, at 32.73 last week. 0.73. Look at this. It went to, so first of all, there's a technique. I remember I mentioned a buy mode goes at least to a peak D. It can go higher, but D's where other things can happen. Well, if within 3 bars it goes to a higher high, you have an alternate count. You say, okay, the next one is a peak E/A. Peak F, and then quietly you say to yourself, /B. And then the next one you type in very seriously G/C, because G/C very often after an instant restart has enough power to go to a D. Lo and behold, 1 week later it pulls back. 1 week later it goes to an all-time high of 32.73, and now from 32.73 it's trading at 24.02. Now I'd said to subscribers that I'm thinking that I want to move out of Bank of America. This is the longest we've ever had Bank of America. We've had it on and off for years, but we get in at the lows and we get out towards the highs, and we get out, and then we wait, we do it again, and then we do it again. This one we waited the longest, and then we got in. You can see right there, long, right, 2024, and we were waiting for the target of 50.11. That was the high of February of 2022. And We did make it, but it was still in leg D, so I said we'll keep it. Now look at the two different charts. What I had said was maybe we get out of the old-fashioned Bank of America and we go into the more contemporary SoFi. But I need to see what's going on. I want to see how it holds. The Bank of America holds this up channel trend line, the 200 period, the 14-period moving average, just a lot of things. It did make a peak D in the daily chart mid-November, and it's pulled back from the 54s to the 51s right now. It's a peak E in the weekly chart. I got to be careful there, peak E. This is where we can start. If we break down here and a leg D in the monthly chart, got to be careful in Ds. So I'm thinking SoFi has not acted as well. Look at this. It made a leg D in the monthly chart, a peak D in the weekly, but as a chart formation, look at that serious decline. And it's taken out the left side low. On the left side, that was around about October the 3rd, which was around about the 25 area. It's just taken it out as if it wasn't even there as support. So I'm going to have to make a decision whether I want to either swap out of Bank of America, get out of Bank of America, or keep Bank of America. We've only got a little bit left, but still it's a position, and add SoFi. I'm not doing that yet. I need to see this fulfill its obligation, and its obligation is for that 9-period moving average in the weekly chart not to cross negative, and to do that, it would have to go down to 20. And it could do it, but it hasn't done it yet. So I'm not yet ready to make a commitment, but other than to say, if you're looking at entering SoFi, I'd hold off. There's a lot going on with rates and all sorts of things in the financials right now. You've seen that the XLF is starting to pull back. That's the money center banks. This is not a money center bank. Hold off. All I would say is there, by Tuesday, Wednesday, give it to Wednesday, day before Thanksgiving. If Wednesday next week, it can have a bounce into the lower part of this ugly candle from yesterday, if it can get into the 2630s, yeah, even if it tags 26, I'd be impressed with that strength. Let's see what happens. But right now, I'd say I'd be careful. A question about the so this is the where did I write it? Question came in about whether to. Oh, what do you think is weaker, the semis? Oh, I'm sorry, I didn't get that. So, is a semiconductor going to be following the? Is it? How's it put? Oh, will the semiconductor follow the Dow, the S&P, and the IWM? Is it related? Yeah. Okay. So let me just do this. SMHs right now, semiconductor index. We did not short this. We wanted it, didn't do it. Spoke about it all the way from the top at 372.70. I said, oh man. And NVIDIA was in that category. Never did it. So today the semiconductor goes down to 315.05. It's trying to bounce off that right now. It's at 318.69. That's a little bit of a bounce. It's a leg after the downside. Most importantly, so yeah, this made a high in October. The Dow, look, the Dow made its high in November, over a month later. The S&P, everything's all, highs are made in rotation. Lows are made in synchronicity. Just remember that. So the 29th of October, October was the 29th, same day, was the SMHs. The IWM has been going down since the 15th of October, 252.77. So I should mention that we did get a short out yesterday as it was turning from the top to coming down. And I think it's something that I do want to hold for now. We did take a little bit of profit. It was very nice. But I'm thinking that we're going to, as long as there's talk about lower rates, it's going to help the IWM with the Russell 2000. So the question was, yes, I think that the semiconductor index has some look, someone mentioned Marvell in the den. Look at this Marvell. This is one of the most unusual things. It made a peak C high, but that is, I shouldn't say unusual things, because it made a high, but it was under the major high of 127.48. Normally at all-time highs, you don't get peaks B's or C's. It happens once in a while, and it's very confusing. Most of the time, it's D or higher, the fourth highest peak or higher. So this turned around at a peak C around about 96.5, and now it's trading at 75.47. And the weekly chart, as a weekly chart, it looks okay if you forget about this left side when it went to 127. Now, I'm just saying, I think that the semis, advanced micro devices, AMD, here it is. It made a high of 267.08 end of October, had a double top, and now it's down at 198. No, I think they deserve a rest. And I think that's telling us that the market. So the question is, will the SMHs follow? Yeah, they're actually in synchronicity with the S&P. But I do think that semis are still vulnerable. Absolutely. And the question about the IWM is the Russell 2000. It is vulnerable, but I think it's kind of levered towards hearing news about lower rates. Lower rates says, that helps these small caps and small caps. I'll be back. Dow's up 256, S&P's at 40.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let's just do this as the Chinese large cap. It looks like it, I mentioned this the other day, it looks like it wants to retest the low that was made. It's trading down 29 cents at 38.29. The low that was made on the 10th of October of 38.12. What I missed it by 3 cents. That's where I think it's going. If it closes under it, that's like the arch formation. It says that you got 2 or 3 sessions in which to try to get back to close above that. Otherwise, it looks like it could go lower. But this is the dreaded H pattern. What's the dreaded H pattern? Chapman methodology. This is what we're looking at here. It comes down sharply, usually from a high. And then you got 3 patterns: straight line up, straight line down, cup formation, arch formation, mixture of 1 and 2 and 1 and 3. This is 1 and 3, the dreaded H. If it comes down sharply, takes out the left, so fails at a peak A or a B, and takes out that left side low, seriously takes it out, that's usually a very negative sign. So we're watching this closely. There's your H pattern right there. Let's see what happens next. The leg D, probably a peak D in the monthly chart, peak F in the weekly chart, and 42 round number high recently in October, and now you're down at 38.30. So watching that closely. All right. So as we're about to wrap up, let me just do this one more time. The VIX index trading down 14 cents at 26.28, but still in the higher range. I'm watching this closely because this is options expiration. I think the turnaround yesterday for options players, even for them, it might have been really sharp. So I'm watching to see if they aren't going to try to rally a little bit more so they can have another shorting experience that they prepared for next week. I don't know. But in the meantime, A, B, there's your C, there's your D, trying for an E in the 1 minute chart, and the 5 minute chart has 65.83 as both a target and a resistance level. And as I say, if the S&P anytime today, instead of plunging under 65.30, can actually move to the 65.98, 66 area, 600 area, that's going to suggest that 200 period moving average in the 10 minute chart at 68.11 could be it. Stay tuned for Steve Rhodes. Check out my opening call. We've raised cash. We are short. We're just waiting for some kind of a bottom to start.